Hello, fellow traders. I want to welcome you all to the Simal Trading Institute. I want to talk a bit about the Simal Trading Institute. Simal Trading Institute is an institution that has been set up to help new Forex traders or anyone who wants to become a Forex trader, but the person doesn't know how to go about it. The person doesn't know how to start, how to earn, or doesn't know anything about the Forex trading or the Forex market. Simal Trading Institute is here to help you. So the only thing that I will expect you to do is that any lesson that we study in the Simal Trading Institute, you go, you study, you practice it, you make more research to enhance your knowledge base. So Simal Trading Institute is basically set up to help young traders who doesn't know how to trade, or people or traders who have tried trading before, but because they don't know the technicalities in the trading business, they blow accounts and they lose a lot of money. So this particular institution is here to help you. Thank you so much, and let's zoom to our main business. Today we want to talk about Forex trading, but before we talk about Forex trading, we'll look at trading. Is that okay? At the end of this particular lesson, you want to know what Forex is. What is Forex? If you hear Forex, what does it mean? We also want to know and understand what Forex trading is. What is Forex trading? You want to look at the currency pairs in the Forex market, and you also want to look at pips and its importance. So if we talk about pips, what are the importance of pip? We want to look at that. Along the line, I'll be talking about, I'll be mentioning some Forex terminologies. I will entreat you that anytime the terminologies are mentioned, kindly take a note, go and research about it, come back and ask questions. I think that would be very good for both of us. So let's start. What is Forex? Forex is a global financial market that allows exchange of currencies. What is exchange of currencies? Let's take this example. A businessman or a businesswoman want to go to China to buy some goods and come to Ghana or come to Togo or come to Nigeria to come and sell. What the person need now is, the person is not in China, but the person want to go to China. How will the person go to China? The person must try as much as possible to carry the Chinese yuan. If you don't have the Chinese yuan, there's no way you can go to China to go and spend the naira or to go and spend the sefa or to go and spend the Ghana cedis. No, it's not possible. So what the person will do is, the person will go to a Forex bureau, go and exchange his or her local currencies with the one that he wants to use in the purchasing of the goods. So he goes there to go and exchange the Ghana cedis, the naira, or the sefa for Chinese yuan. Now, as you do that, you are doing what you call foreign exchange. So Forex is from two words, foreign and exchange. You are exchanging your local currency for a foreign currency. That's why we have the name foreign exchange, which in the short form is called the Forex. Now, the idea is different when we come to Forex trading. Now, before we talk about Forex trading, I want to look at trading in general. What is trading? Like I was trying to say, a businessman wants to go to China to buy some goods and come and sell. Now, when he gets to China, he's going to buy the goods at a very low price. But when he comes to his local country, he's going to add some money to the cost price and sell. Now, when you look at the difference between the cost price and the selling price, cost price will be smaller than the selling price. So when you strike the difference, you get some money. That becomes your profit. Is that okay? Now, why is the trader doing this? The trader is doing this with the mind of making profits. So no business person do business to make losses. They always do business to make profit. So when you also come to the trading business, your main aim is to make profits, not to make losses. So when you talk of forex trading, we say that forex trading is buying and selling of currencies. Now, the currencies here is money. We are talking about money. So in forex trading, we talk about money. In forex trading, we drink money. In forex trading, we eat money. And in forex trading, we spend money. We spend money or we use money wisely. So you go and buy the currency at a low price and you sell it at a higher price. Now, what is your aim? Your aim is to make profits. That is the main aim. So if your aim is to make profit, then forex trading is good for you. But if your aim is to make losses, then I don't think, and I'm saying it again, I don't think forex trading is good for you. Guys, I believe that your main aim is to make profit. So flow with me, follow me along, and move with me. Let's make profit in the forex market. Let's move on. Now, I want to look at some of the traded assets. Assets are variable goods or services. It can be skills, or it can be anything that you value much becomes your asset. So when you look at the markets, for as an example, what are some of the things that are traded? We trade currencies. We also trade stocks. We also trade stocks. Companies list themselves on the stock market and people buy shares into the company, and they make profit when a company is making profits, and they make losses when a company is making losses. We also have energies. For instance, energy includes oil. Oil is a form of energy. So when you go into the forex market, we have a portion where you add energy to your selections of commodities or assets. We also have indices. Indices we will talk about that later on. But for now, our main focus is going to be on the currencies. So we'll talk more about the money or about the currencies. All right, let's look at the currency pairs. What are the currency pairs? We have three major categories of the currency pairs. We have the major currencies, we have the gross currency, which you call the grosses, and we also have the exotic currency. The exotic currency. Sorry for these categories of currencies coming last, but let's take it to that. So we also have the exotic currencies. Now let's look at what the major currency entails. Now, the major currencies are the currencies that are mostly traded in the forex market. They are the currencies that have higher liquidity. So I've mentioned the forex term, which is liquidity. You try and research about liquidity and you ask questions, and then we'll take it up from there. We have the euro and the United States dollar. We have the United States dollar and the Japanese yen. We have the British pound and the United States dollar. We have United States dollar and the Switzerland dollar. We have United States dollar and the Australian dollar, and so on and so forth. There are more of the major currencies, but we can't talk about everything at this very point because of our time factor. So we'll talk about a brief and then we'll move on with the rest. Now let's look at the cross currency pairs, or the crosses. Now the crosses have three major categories. We have the euro crosses, we have the yen crosses, and we have what? The pound crosses. Which means that when you talk about the euro crosses, the euro currency is combined with other currencies that become the euro crosses. Or let me say the euro currency is combined with other major currencies that become what? The euro crosses. We have the yen crosses, which is Japanese yen combining with other currencies that form the yen crosses. And then we have the pound crosses, which is the pound currency combining with other currencies that form the pound crosses. So let's look at the euro crosses. So euro is combining with CHF, Euro is combining with GBP, Euro is combining with Canadian dollar or CAD, and so on and so forth. So all this becomes the Euro crosses. Now let's look at the yen crosses. The yen is also combining, the Japanese yen is also combining with the euro, and combining with the pound, combining with the Canadian dollar, combining with the Australian dollar, and so on and so forth. So these are examples of the yen crosses. We also have the pound crosses, which means that the pound currency is combining with the CHF, is combining with the Australian dollar, is combining with the New Zealand dollar, is combining the Canadian dollar, and so on and so forth. So these are just a few examples of the crosses that we are talking about. So let's go into the market and see exactly what we are trying to talk about. Now we are into the market. Now, in this particular market, we have the euro and the United States dollar. So this particular chart is the euro USD charts. Now you can see some red and green candlesticks. You can see some will call it bar charts, but these are candlesticks. We'll be explaining this particular candlesticks and the psychology behind it later on. Now, when you come to this point here, I will have a time and I'll teach you how to use the MT5 or the MT4. But for now, just follow me. When you click on the Forex, you have different kinds of currencies that are in display. A lot of them are in displays here. Is that okay? So if you look at the first one, we have the GBP and the pound. We have the USD and the CHF. These are some of the things that I spoke about earlier on. I just want you to look at it in practicality. So it's not that I'm just going to bombard you with some kind of knowledge, but I'll go to the market. It's a live market. If you can observe critically, you'll see that the market is going up, which means that the euro is gaining value. And as the euro gains value in this particular chart, the dollar is losing value. That's how the whole game plays. One currency becomes stronger than the other, and then if you believe and you predict that a particular currency will become stronger than the other, and you buy into that particular currency, when the currency indeed becomes stronger than the other currency, you make your profits, and then you take your money and you go off the market. In this particular market, we don't stay for long. If you stay for long, you are in trouble. Your money can finish, you can blow your account. So if you make enough, not enough, if you make a little profit, get out of the market. Don't be too greedy to scoop everything out of the market. In fact, if you are too greedy, the market will show you that a day before you come. So just be content with what you have, and then you move on with your trading. So basically, these are some of the things that we'll be talking about, or we will be experiencing in the Forex market. Today I'm using the desktop or the laptop view. With time, I'll be blending that with the mobile view as well, so that you know how the mobile interface and the desktop interface also look like. So all right, so we are on the euro crosses. I hope you have an understanding of the euro crosses. Now we also have the exotic pairs or the exotic currencies. Now these exotic currencies are United States dollar with any other currency. It becomes an exotic currency. So we have a lot of them. I don't want to mention all, but as you can see on the screen, we have a lot of the exotic currencies. The one you can see on the screen are just very few. They are just very few. So these are some examples of the exotic currencies. Now, when you go back, you will see some examples of the exotic currency. They are there: the United States dollar and the Chinese yuan. I think that's it there. The Chinese yuan, that's CNH. We have the United States dollar and the Japanese yuan, and then so on and so forth. We even have the United States dollar and the Russian ruble, the Russian ruble. So these are some examples of the exotic pairs or exotic currency. But most of the time, you can't trade in all these currencies. You can't. You can't. In fact, if you want to trade in all these currencies, at the end of the day, you end up blowing your account, because each currency pair behave differently. So the advice I will give now is that you have to be focused on one particular currency, master the currency. In fact, use at most 1 year or at least 6 months to study the behavior of the currency. Then it informs you on how other currencies will behave. So you have to be very careful at that. Now, let's take the Euro USD as an example. If you understand how the Euro behave with the United States dollar, anytime you take any Euro pairs, the behavior is the same. So you realize that when you study one particular currency pair for a full year, you're going to have command over the markets. You are going to have command over the market as far as that particular currency pair is concerned. And if you understand how that particular currency pair moves, you can go to that pairs again with another currency. For instance, I have United States dollar plus and the United States dollar and the euro. Okay, I don't have any euro pair here, but I can add a euro pair and I'll show you how the chart is going to be. The chart is obviously the same. If the euro is gaining value with the dollar, it will gain value with the pound, and it also gain value with the yen. So that is how the technicality is all about. So just be patient, move with me. Don't be too fast to say, oh, this one I know it. Just take time, move with me, and at the end of the day, you will never regret. Thank you. So let's. All right, our next objective is pips. We want to know what pips are. What are pips? What are pips? You hear pips, pips. Oh, I've made 1,000 pips. I've made 20 pips. Oh, today I lost 3 pips. I lost four pips, and so on and so forth. What is pip? We say the pip is the unit of measurement to express the change in value between two currencies. So if you look at the euro and the dollar, if you look at the euro and the dollar, you can see some numbers on my screen here. There's a blue button that changes red as time goes on. Now, the last 2 digits or the last digit, which is 3 or 83. Now, that's the 3 or the 4, it changes. So the 4 or the 3 becomes the pips. So as this one moves, the 8 also increases or decreases. Is that okay? So that is the pips. So we measure the value of a particular currency based upon the pips. The pips. So if the currency has a higher pips, it means that that particular currency has increased in value. When a currency has a lower pips, it means that that particular currency has decreased in value. Now, you want to know the importance of the pips. What's the importance of the pip? Why are we talking about the pip? Now, if you look at the screen carefully, you also see that there is a particular digit in that particular box. I've highlighted it blue. Now, what you can see from there is 0.03. Now, that 0.03, we call it the lot size. The lot size is basically what we use to do risk analysis, to manage your risk so that you don't be too greedy and increase the lot size, and when the market is going against you, you blow your account. So I'll be talking about the lots, I'll be talking about risk analysis in our next lecture. So when I get there, I'll talk more about the risk analysis and then the lot size. But now I want you to look at this thing carefully. Let's assume that this particular currency, the euro, was at 1.08284, and I've seen that the euro is going to grow in value. So I place a buy trade. After placing a buy trade, I watch the market. The market is going in my favor, and the euro has increased from 1.08284 to 1.09385. That is a high, or that's a lot of pips. So let's assume that the pips there is 1,000 pips. That is what I have gained, or that is what the euro has gained in value. And because I bought it at that particular level, I have made a profit of 1,000 pips. Now, how do you calculate the amount of money you have made in the forex market? Just multiply the 1,000 by 0.03. When you do that multiplication properly, you will see that you get 30. That 30 is in dollars. So that is $30, cool $30 that you have gained within less than 24 hours. That is, it's a cool business, but you must know how to play the card properly. So that is the importance of pips and how to use it. I want you to just be very committed to this lesson we are learning, and at the end of the day, you will never regret it. Simal Trading Institute is set up by God, and in this particular institute, we believe in prayer, we believe in reading the Bible, we believe in Jesus Christ, the Lord and the Savior of our life. And we believe that it is only God that can make you rich, and He will add no sorrow.